Well, first, standard forward-looking statement. Well, Dynacor is a company based in Montreal, listed on the Toronto Stock Exchange, and all our operations are in Peru. So we have a unique business model in a way that we have two subsidiaries in Peru. One is an ore processing, which generates the cash, and we have a subsidiary which is an exploration company developing different properties in Peru. So how it works for the ore processing, we have a mill. We had a mill of 250 tons per day. We've been in this operation for 18 years, and we just built a brand new mill of 300 tons per day. So we buy ore from hundreds of small miners registered with the government in Peru. We process it, and we sell the gold. So we have actually, we own 2 gold ore processing mills and 3 gold exploration assets in Peru. We have a tight share structure, 38.7 million shares, which we try to control very well. We have listed this company in October 2007 with 30 million shares, and actually we have 38.7. So we have generated 22 consecutive profitable quarters over the last 5.5 years. So it has been a pretty stable and a very good operation for us there. We have been in this business for 18 years. Here we have, we are situated in Peru. Both mills, the old mills, Metalex, is here in the southern part of Peru, about 6 hours from the main road. And we just built a brand new mill in Veta Dorada, just beside the coast, beside the road, so much more accessible. So the old mill is here. It's actually in care and maintenance, and we moved all the production in the new mill here, which we started at the end of September of this year. So because of the new mill, we expect to grow the earnings in the coming year. We'll at least double that. We had, in the last 4 quarters, 10.6 cents in Canadian dollars in net profit, and we expect to more than double that with the new operation. So if you look at that, the old mill here, we have been in operation, sorry. Okay. The old mill here has been in operation until the end of September of this year. We have been working for the first 3 quarters of this year at 210 tons per day. And we were on an annualized basis of 67,000 ounces of gold. We moved all the production to the new mill at the end of September. Now we're operating at 350 tons per day, 250 tons per day, and we expect to increase that to the maximum actual capacity of the mill at 300 tons per day in the coming months. So based on that, actually we are operating at 83,000 ounces of gold per year, but at 300 tons per day, we should process more or less 100,000 tons per year. And with the actual permit, we can increase that to 360 tons per day, which we expect to do in the next year. So at this level of production, we should process close to 120,000 ounces of gold per year. If we look at the past 5 years, here you have the net earnings, 2011 to 2015. So what's interesting here, and we'll see in the following page, in 2015, we generated $3.2 million in net profit, or 9 cents per share. And we'll see in the first 3 quarters of this year, we have already generated $3.1 million. And we just moved in the new mill where we'll increase the gross margin substantially. So if you look at this one here, you have 3 scenarios, one at 1,100 $1,100 of gold price, $1,200 and $1,300. So today we are at $1,200, and you could see the gross margin, the gross operating margin. We should generate at 300 tons per day, which is the second one here, and going to 360 tons per day next year. We should be there. And actually, in the first 3 months of this year, in the first 3 quarters, we have been here, the red line here. So if the gold price comes down, it's what you have here, and if it goes up to $1,300, it's what you have on the right-hand side. So it's quite a good change with this new mill, which we just started 1 month ago. So what is the difference with this new mill? We expect a much higher gross margin than what we had up to today. Our target over the last years have been always 17% as a gross margin. And with the new mill, we expect to increase that substantially for different reasons. First of all, the old mill was not connected to the national grid, so we had to generate our own energy, which is costly. It's about 27 cents per kilowatt hour. And being connected to the national grid will be around 8 cents per kilowatt hour. Because of higher throughput, we are going to lower our fixed costs per ounces. And just that on the tailing savings, for example, where we were, it was more and more difficult to build new tailing ponds, and the costs already reach almost $15 per ton. In the new place, you'll see it on a video later on. It's flat, it's very easy to do that, and the cost is less than $2 per ounce. So just with the tailing savings, we will increase our gross margin by $1.3 million a year. So that's why we expect to increase this gross margin of 17% substantially. Over the 5 years, this margin has been between 14 and 21%. But with the new mill, we expect to increase that by several percentage points. So in 2016, what happened in the company, we have obtained a $10 million credit facility in January to be sure that we have enough cash to finish the mill and have enough cash to be able to buy this ore, because buying the ore from small miners, we have to pay them right away. So it's a cash incentive business. We finished the construction of the mill in May. We have began the construction in June 2015. We finished that in May. The plant startup was September 25, so it means just less than 2 months ago. In the first 9 months of this year, we have $69.3 million in net sales. We have generated $5.4 million in cash flow and $3.1 million in net earnings. And you can compare that with last year, where we have generated $3.2 million in net profit for all the year. So this year, adding the last quarter, we should be somewhere probably between 4 and 4.5, and it gives a good look at what will happen in the next year operating the new mill on a full year basis. So actually, the market cap is 113 million Canadian dollars, means around 90 million US dollars. So the near-term investment drivers, we have a new cost-efficient mill compared to what we had until recently. We'll increase the cash flow substantially, as we just saw, and we'll increase the profit margin substantially to, in a first step, going to 300 tons per day, and later on next year, 360 tons per day. This mill has been built to process in the first step 300 tons per day, but it has been designed to be increased in the future to 600 tons per day. So we can increase that step by step. We can go to 360 tons per day with the actual permit. And to go over that, we need to apply for a new permit, which we will begin these paperwork in the coming weeks. And before the end of next year, we'll be ready to go to 450 tons per day if the market is there to feed that mill. So I'd like to go now with a short video where you'll see the new operation, the new mill.
Dynacor Gold Mines is a Canadian company that produces gold and explores its mining concessions in Peru. It began operations in 1996 through its wholly owned Peruvian subsidiaries. Part of its gold production cash flows are used to finance its exploration campaigns at its flagship gold project, Tumipampa. Minera Veta Dorada employs more than 300 people working from its headquarters in Lima, at its gold production facilities, and at its 6 ore purchasing regional offices, including the main one located in Nazca. Ore processing is a capital-intensive business in which Minera Veta Dorada purchases and processes on a daily basis ore supplied by more than 200 artisanal small miners from throughout Peru. The ore was trucked to the Metalex plant on a narrow winding road leading to the ore processing facility located many hours off the Pan American Highway, near a remote village of Huanca. Suppliers have faithfully used that road for more than 18 years, building with Minera Veta Dorada a solid business relationship based on trust and respect. The Metalex plant has proven over time to be a steady operator and gold producer. Acquired in 1996 as a partially built 50-ton-per-day mill, it poured its first gold bar in 1998. Since then, its production capacity has grown organically through a methodical and disciplined approach, reaching a nearly average of 65,000 ounces of gold over the last 5 years. Working only with government-registered miners, Dynacor has become de facto a natural partner of the Peruvian authorities in their efforts to formalize the small-scale mining sector. It is the best eco-responsible solution for the processing of ore produced by small artisanal miners, helping to reduce and hopefully eliminate the use of mercury, which is often part of the artisanal gold recovery process. Furthermore, the plant complies with all the Peruvian mining regulations, has an efficient and eco-responsible water recycling system, and secure tailing ponds. Years ago, Jean Martineau, president and CEO of Dynacor Gold Mines, outlined his plan to launch Dynacor to become a leader in the Peruvian ore processing industry. This could, however, only be achieved by expanding and relocating the company's gold-producing facility. The process began in 2011 with the filing of an environmental impact study for the construction of a brand new milling facility in southern Peru. This 5-year project was implemented by Dynacor's Peruvian management team at Minera Veta Dorada. In September 2016, this long-term goal became reality when the company obtained the operating permit for its new Veta Dorada ore processing plant. The new plant is strategically located just miles off the Pan American Highway in Chala, Peru. Its 95-hectare concession, efficient design layout, and centralized location provide opportunity for future mill expansions. Together with decades of safe, inexpensive tailing storage, it is a game changer for both the company and the small-scale mining industry in Peru. After 18 years of successful operation of the Metalex plant, it is now time to turn to a more modern, effective, and cost-efficient operation that has been designed to allow future increases in milling capacity in the near future in step with ore supply. Built to drive the Peruvian ore processing industry to new heights, the opening of the Veta Dorada ore processing plant is truly welcome. Welcome to the new Veta Dorada plant.
The other subsidiary of the company is Tumipampa. It's exploration property. And we bought that in 2000. We did already more than 2 kilometers of underground development and adits. You have here a view of the campsite there. And this is one of the adits, the crosscut we have built over the years. Here, this is the claims of the property. These are the main claims we had. We have 4,800 hectares there, and all the development of property has been done there. Recently, we bought what you see in blue here. It's another 46 hectares. This one has been freed, and we had the opportunity to buy it first, and we'll explore that later on this year. And here we bought another 300 hectares. This part is really interesting because on the property here, as we'll see, we have it disseminated here, and the structure of this property are in this direction here. So it looks like these structures are continuing here, and that's why we have acquired that. So we have extended that substantially, and if you look at the maps here, actually we're surrounded. When we came here in 2000, there was no other company. We were the first one there. And now you have Buenaventura, Southern Peru, Barrick Gold, Anglo-American, IAM Gold. It's now a very, very active exploration campsite. So here's just a view on the surface. We began the exploration here on the veins. We bought this property for 4 high-grade gold veins in the past. Today we have identified 25 of these veins. And over the years we have identified a huge skarn on the northern part of the property here, which is 4.1 kilometers long by 1.7 kilometers wide. And a year and a half ago, we discovered here a large porphyry. And following that, here we have identified a very, very interesting zone, which is a disseminated zone just on the surface. We took thousands of samples on that. It's very accessible, easy to drill, fast to drill, cheap to explore. So today we have 4 different structures on that property. These high-grade gold veins, skarn, porphyry, and this disseminated. And it's because this structure here seems to continue in the south, why we bought the 300 hectares on the southern part. So we are in exploration in this, and we pay the exploration on this with the cash generated with the mill. So in this way, we don't have to dilute the shareholders. Just to show you an example of the veins here, you have, in the main crosscut, we went through a Manto Dorado structure, and we have identified here, we have 15.5 grams of gold per ton over 7.4 meters. And in this 7.4 meters, there is a 36.5 gram per ton over 85 meters. This is not the average. The average gold grade we have in these veins is around 0.4 ounces per ton, but it's still pretty high. And we have identified up to today 25 of these veins. And here you have an overview of the property. This is the porphyry system here. The skarn is just on the north of the property. The disseminated is on the other side here, and the veins are on that side there. So we have a large property. It's a lot of work to do there, but up to today we found gold in all these structures. So it's very, very exciting there. We've been in Peru for 20 years now. We've been there since 1996. We have 325 employees in Peru, and they receive 8% of the profit before taxes. So it means that we have the possibility to retain our employees easily, and it's create a sense of pride with them. We have a very, very good team there, and it's going very well with this. We don't have a turnover of a high turnover of employees there. We have to invest in a corporate social program, like here you have a photo of a library for a local community. We have about computers for local school. We've built roads around these communities, so it maintains a good relationship with them. And in Peru, it's really, well, in most countries in the world, but especially in Peru, it's very, very important. So the capital structure, the company share outstanding 38.5 million shares. Fully diluted is 41.9. We have actually $16.1 million in working cap, $7 million in cash, and the credit facility, $10 million. We drawn on that already. We have drawn $7 million and repaid $0.7 million. So it's a very good situation. We won't need any more cash to expand the capacity to 360 ton per day next year. And well, we started the mill at the end of September. We didn't have any problem to start a mill. It went very, very easy. So now we are operating at 250 tons per day, and we're gonna ramp it up slowly to 300 tons per day. So this is what we have there. I thank you very much for your attention, and we'll be the other side for any